This is Luckin Coffee, the Chinese coffee chain that beats Starbucks that you've probably never heard of. It doesn't care about taste, doesn't care about vibes, all it cares about is getting you addicted. But it was only a few years ago that Luckin was caught in a massive corporate fraud scandal. It should have been over. 3 years later, and Luckin had more stores in China than Starbucks. This isn't just a comeback story. It's a masterclass in engineering human behavior, because Luckin didn't just sell coffee. It sold a habit you didn't even know you were in. How did they do it? And why did it work so well? Let me explain. See, China loves tea, so coffee chains never really took off, until Starbucks turned lattes into a status symbol and racked up 3,000 stores in China by 2017. That same year, a newcomer, Luckin Coffee, spotted a hole in Starbucks' armor: price. Luckin sold the same caffeine hit for 20 to 30% less, and suddenly coffee wasn't a luxury treat anymore. It was an everyday habit anyone could afford. And let me tell you, that is just the tip of the iceberg when it comes to Luckin's strategy. They were aggressive from day one. Their launch strategy looked like one a tech startup would use rather than a traditional coffee chain. New customers got their first drink completely free, and that was only the beginning. Customers were then flooded with offers. Refer a friend and you both get a coffee. Share a link and you get a coupon. Come back tomorrow and get 50% off. It was a loop, and once you stepped into it, Luckin made it very hard to step out. Unlike Starbucks, which built its empire on ambiance and an aspirational lifestyle, Luckin didn't care about becoming a third place. Every order was placed through their proprietary app or WeChat mini program. There was no counter to walk up to, just a pickup shelf. And that was by design. By the end of 2019, just 2 years after launching, Luckin had over 4,500 stores, more than Starbucks had in China. It became the fastest growing coffee chain in the country and one of the quickest Chinese startups to hit $1 billion valuation. But the real engine behind this wasn't just the pricing or the store count, it was actually the data. Because Luckin funneled every single transaction through its app, that meant user behavior, purchase history, location data, and more were all collected, analyzed, and fed back into their system. Using a combination of AI and manual analysis, Luckin could predict what a customer might want, when they might want it, and how to get them to hit the order button again. And it worked. The near constant stream of coupons created a kind of gamified satisfaction loop. You weren't just buying coffee, you were winning. A flash deal here, a loyalty bonus there, a free latte just because you tapped your friend's invite code. For millions of people, this became part of their morning routine. Even the pricing structure had a clever strategy behind it. On paper, Luckin's coffee was just slightly cheaper than Starbucks, but once you layered in the discounts, it became dramatically cheaper. And it meant that it never felt like low-end coffee. Instead, it felt like you were hacking the system. The result? A customer experience that felt less like a coffee run and more like playing a well-designed mobile game, complete with rewards, progress, and instant gratification. And yet, just as Luckin seemed poised to become a dominant global brand, it all came crashing down when a whistleblower released a document. In April 2020, the bombshell dropped. A whistleblower inside Luckin's finance team leaked a 96-page spreadsheet of falsified invoices. The news spread quickly, and 2 weeks later, Luckin put out a press release. Approximately $310 million of 2019 revenue never existed. Luckin admitted to fabricating millions of dollars worth of sales to inflate its numbers and to mislead and attract investors. Its stock crashed 80% overnight. The CEO and COO were fired. The company was delisted from the Nasdaq. For most companies, this would be a death sentence. But Luckin wasn't most companies. In a strange twist, customers didn't really care. The app still worked, the coffee was still cheap, and the rewards were still flowing. The company began a full-scale restructuring and entered bankruptcy protection in the US. It closed underperforming stores, brought in new leadership, and slashed costs. What was remarkable here was the confidence from a few investors. Even during the scandal, some private equity firms saw a potential comeback, betting not on Luckin's leadership, which evidently failed, but on its operating model. By 2021, it had emerged from the ashes with a new strategy. A strategy not to rebuild the brand, but to optimize the loop. The new Luckin doubled down on its app. They introduced a gamified reward system where users got points for each order, streaks for daily purchases, and random coupons for checking in each day. They basically doubled down on a psychology technique called variable reward schedule. It's the same principle that makes slot machines addictive. Luckin used it for coffee, and it worked. The more often users ordered, the more rewards they got. The app tracked their habits and nudged them with personalized deals. Luckin then builds on that momentum with carefully timed limited edition drink drops. The first was raw coconut latte in 2021. No billboards, no lengthy ad campaign, just a late night push notification, and it was an instant success. At the drink's peak, Luckin was selling 10 million of them a month. 2 years later, they raised the stakes with a sauce-flavored latte, a collaboration with one of China's iconic liquor brands. On launch day alone, customers ordered 5.4 million cups, which was enough to strain the app's servers and briefly freeze mobile orders across the country. Luckin's stores also evolved. By 2023, Luckin's average footprint was less than 25 square meters. Most orders were ready within 2 to 3 minutes. It wasn't a place to stay, it was a place to collect. And because of its automation and small store strategy, Luckin scaled even faster than before. As of early 2024, Luckin has over 13,000 stores in China. Starbucks? Just under 7,000. Today, Luckin isn't just beating Starbucks in China in store count, it's outpacing them in revenue growth, daily transactions, and app usage. And Starbucks is responding by mimicking Luckin, but it might be too late. Luckin isn't just a coffee chain anymore, it's a case study. It's about how to turn a product into a behavioral loop, and how to turn customers into daily users. The most important question you should be asking yourself from this video isn't whether Luckin is going to become a global coffee giant. It's what happens when this model is exported to everything else. If you want to know how a TikTok trend lost Australia $1.6 billion, click here. See you next time.